look, 2021, there was growth and adoption for sure. But if we really want these asset managers, this real money to enter the space, there are a couple of items we need to address. Credit intermediation, banking. We probably need better, household names, tier one banks to bank the crypto firms.
Chris Kuiper, Director of Research at Fidelity Digital Assets. Nathan McCauley, co-founder and CEO of Anchorage Digital. And Jenna Wright here, who is the Managing Director at LMAX Digital. And I'd love to just maybe I'd like you guys to make a quick introduction. Michael, if you want to just introduce Genesis and what Genesis does and how you guys are serving these institutions.
Sure. Good morning, everybody. Michael Moro, CEO of Genesis. So we got started right around when Micah got started in early 2013. And we are an institutional-only firm that provides prime services. So that's buying and selling spot, derivatives. We have a borrowing and lending business, as well as a custody business in an effort to try to be the one-stop shop for institutions trying to interact with various cryptocurrencies.
And thank you. And Chris, so obviously Fidelity is an old player, established player. What is their entrance into the crypto market, and how are you playing a role there?
I'm sorry, could you repeat that?
Fidelity is obviously an old school company in the traditional financial space, and now they're making the entrance into digital assets. And so what role are they playing in the space?
Yeah, so Fidelity Digital Assets is a subsidiary of the large Fidelity brand that many of you are aware of, I'm sure. And they started, back in 2014, exploring Bitcoin, experimenting with it, getting their hands dirty with mining. And then it wasn't until 2018 when Fidelity Digital Assets was born. And one of the first services they realized they needed was a enterprise-grade institutional service to custody Bitcoin, which is still one of our largest products today. And so we bring that institutional level custody as well as trade execution and other services on top of that to our institutional clients.
Great. And Nathan, Anchorage is a digital-first company, crypto-first company. What are you providing to this market that we really needed? And how do you see this evolving for digital native institutions like yourself? Are you looking to become the next institution? Are you looking to replace the existing set? Or are you looking to help the existing set come into the space?
Yeah, so happy to be here. Thanks, everyone. I'm Nathan, co-founder and CEO of Anchorage. Anchorage is a digital asset platform for institutions to be able to participate in the digital asset ecosystem. We spend a lot of time, energy, and attention focusing on Bitcoin and how to get Bitcoin into the hands of as many institutions as possible, whether that is hedge funds, sovereign wealth funds, governments themselves, anybody who's looking to take a position in Bitcoin, we help facilitate that. And then increasingly are looking to help all of the banks, fintechs, and brokers in America and globally look at ways that they can adopt crypto as well. And so we've been very, very fortunate to be granted the first ever digital asset bank charter from the federal government here within the US. And so we're using that bank charter and the technology we've built to do all we can to propagate Bitcoin into all areas of the institutional financial markets.
And Jenna, LMAX is obviously an established firm. You guys have been trading in the FX markets for many years. And now you're entering into the crypto space, or you have entered into the crypto space and doing significant volumes. Tell us a little bit about that and your journey there.
Sure. So LMAX Digital is, like the rest of the team here, institutional only. We operate a cryptocurrency exchange operated by LMAX Group, like you say, who has been in the FX or foreign exchange markets for the last 12 years. So LMAX Digital came around really because of client demand. We had a ton of our FX, HFT type clients knock on the door and ask us if we could do something very similar in crypto. So really for them, it was about institutional grade infrastructure there was a bit of a gap in the market in 2017 when we started looking at it, and we felt that we could fill that gap. And really for us, crypto, Bitcoin, it's essentially just another currency. We see it very similarly to how we do a foreign exchange pair. And yeah, we've had 4 years of growth.
Yeah, and I think, it's interesting because you're talking about high frequency traders, and these are sort of people who would normally trade traditional assets, and now they're entering our space. But when we use the word institution, it's really evolved over time, hasn't it? I mean, Michael, maybe you can take us back to the beginning. You guys were established in 2013, right? So that's about the time that I started my company. Sorry, not Blockdaemon. I was acquired by Blockdaemon, but our original company, Gem. The clients we were serving back then were basically very small cryptocurrency companies. We were serving each other, trying to build infrastructure together. How has that changed? And maybe you could walk us a little bit through the evolution of your customer base to where it is today.
So at the time when we first started trading Bitcoin, the price was whatever, $90, $100 a coin at that point in time. The original institutions that were entering this space, typically I like to say like two guys in a garage. I'm not even quite sure there was like two dudes. It might have been one guy in a basement. But as long as you had like an LLC or some legal entity structure and not trading as an individual, you were an institutional investor in Bitcoin. I think when we first started out and trying to find true institutional investors, there were none. Our phone calls were never returned. You call all the hedge funds, you call all the various big banks and whatnot, trying to get them interested and excited about it. And you were either never got an email return, phone calls like hung up on. No one was willing to take your meeting. And so the very first guys that were really kind of interested in Bitcoin were the Silicon Valley venture capitalists and their family offices, or it might be the general partners of some of the biggest venture funds out in Silicon Valley, because the risk return profile of Bitcoin, right? This is 2013. When we first got in, the possibility that Bitcoin could go to zero was real. Like that was an actual risk factor as a business operator but we were willing to take the risk and that the price might, what if it went to $1,000 or $10,000 or whatever it was. But that profile of Bitcoin going to zero as a real possibility eliminated like basically 99% of all of the institutions who were happily making like 6 or 7% in the S&P 500, right? They couldn't risk their investment going to zero. But on the West Coast, like that is the venture risk return profile, right? Like you're gonna miss on 95% of your investments. You hit it huge on like 1 or 2, and it overall like covers your entire portfolio. And so this 100x, 1000x, or zero, this binary outcome for Bitcoin fit very well into the return profile for the West Coast guys. And so that was the earliest institutional investors that we had, were the tech entrepreneurs and the general partners of the VC funds that were basically investing in those companies to say, hey, you know what? Bitcoin is interesting technology and it could go up a lot in value. I'm in.
I mean, do you think that's still the case that the larger institutions are using, say, venture capital as a proxy for exposure to the space, or are they going to actually start holding large amounts of Bitcoin and crypto directly on their balance sheets?
I feel like in the biggest institutions, the left hand has no idea what the right hand is doing, right? And so just because a bank is investing and writing equity checks into the crypto startups does not necessarily mean that they are going to get active in like trading Bitcoin or trading derivatives or offering a custody product or anything like that. I do think, to your point, that it is their best attempt at a proxy for participation in Bitcoin. For one, to make it look like they're actually doing something. But two, more importantly, their regulators at kind of the bank regulator level are like looking over the shoulder, everything that they're doing. And so they are very, very far away from being able to touch, like trade actual Bitcoin, right? And that's why they're coming up with options that are cash settled or synthetic exposure to Bitcoin with a reference price. All of that stuff that settles in cash But it just kind of mirrors kind of the price fluctuation of Bitcoin and kind of the other cryptos. And so that's their safer way to tell the regulators, hey, we're not actually touching Bitcoin, yet trying to create products and services that their clients are asking of them to provide.
And Chris, maybe walk us through the mindset, from the inside of one of these large firms. How do they view this market, and what is the barrier to entry for them at this point to go full bore? I mean, obviously, Fidelity is making steps towards this direction. What is it going to take for the rest of the crowd to really embrace our industry, to start investing directly in not just the companies and not just through proxy, but actually, providing services that are crypto native?
Yeah, so every year we do a institutional survey on digital assets. We go out and we survey over 1,000 institutions to try to see what they're thinking, what you're talking about here. And there's still, what surprised me, and this was last year's results, so we're coming up on a year, so it's maybe getting a little stale, but what surprised me was the big things that appealed to them were also things that could appeal to tech stocks, so high upside potential, low correlation, technology play. And that's fine. Of course, Bitcoin does have those appealing things, but lower on that the data came back was censorship resistance, inflation hedge. Some of the things that people here at the Bitcoin conference would probably have first on their list, not last. And so I think with the institution, you're seeing that's the entry point. But it's going to be really interesting to see how that changes and whether they start to see some of these other characteristics as much more appealing, right? And to your question of what's the barriers, I mean, the top-cited ones, it's still volatility, which I get, but at the same time, they have alternative investments that are just as volatile. They're just not marked to market every second that you're seeing the price, right? And then, of course, they still have to get their hands around how do you value this? How do you value a money or a monetary good, which is really hard to get people to move along and understand that kind of thing. And so it's happening. It just takes time at the institutional level, and I think we've come a long way already, and there's still a huge amount of momentum of people getting it right. They're finally getting their heads around this whole concept.
Yeah, I always find it so funny that we bring up the volatility argument so often about Bitcoin. And yes, of course, it's a volatile asset. But I would much rather have my money parked in a volatile asset that's gaining hundreds of percent a year and going up and down 25% than something that just sits, and fluctuates a couple percentage points. So I really think it's a feature, not a bug. But Nathan, I wanted to ask you this because obviously you and I are more similar, I think, in that we got into this more philosophically for the same reasons. Do you think these institutions are simply suffering from FOMO or fear of missing out? Do you think that there is any buy-in at this point for something much deeper, something larger about Bitcoin in its role in the world as potentially even a global reserve asset?
Yeah, I think one of the things that you've seen kind of over, say, the past 5 years that I've been in this space, there was certainly a period of time where there was a bit of an educational component. If you showed up to a client, you were selling the Bitcoin thesis as much as you were selling your particular services. I'd say somewhere during COVID, maybe the past 12 to 18 months, really, you've seen a shift there, where now there's so much demand coming in. You're no longer having to educate. People understand whether it's things like censorship resistance or inflation hedge, the fact that Bitcoin can be a global public utility and you can value this thing by the network effect and the number of blocks that are happening there. It's become clear that the thesis is clear. The idea for why to come into Bitcoin specifically is resonating with people. And so there's just an incredible amount of demand there. And you're seeing as it kind of goes up the stack, it gets more and more popular there. So we're, of course, working with various institutional investors like hedge funds and even increasingly sovereign wealth funds. You see everything that's going on in El Salvador, starting to think about Bitcoin as a legal tender. And the path here is clear. What happens next is clear. that Bitcoin will continue to be trusted, and likely we'll see increasingly that it will be adopted by say governments or other very important international entities as a true store of value. And so that's just extremely exciting, because it's really just part of this evolution that is happening, and it's increasingly clear that when people want to come in, they want a safe place to hold it, they want a regulated place to hold it, and so much progress has been made there that it's now getting close to the point where it's easy as an institution to adopt Bitcoin, to put it on your balance sheet, to invest in it, and then start to even think about use cases beyond just holding it, whether that is lending against it, and so it ends up being like a reserve and part of your capital base within your company, or starting to participate in, say, other aspects of the ecosystem as well. So really pretty fascinating to see that cascade, and it's pretty clear where the next set of steps go.
Yeah, you mentioned lending. You know, this is obviously like a big use case now that's driven a lot of popularity. I know in our business we have fiat on-ramps and off-ramps, and a lot of our customers provide lending services, which turns out to be a huge part of the demand. People are chasing yield in the cryptocurrency markets. They're looking to put their money to work, and they're getting way better APRs by putting their money into crypto assets and you know, either storing with a custodian or working with DeFi. Michael, I know you guys are one of the largest lending institutions. Can you tell us a little bit about that market, and you know, who's borrowing? Where does this money go? When I put my money in deposit, where is that money being actually used and leveraged, and why are these APRs so high?
So we started our lending business in early 2018, so about 4 years ago now. And at the time, one of the criticism, I think, of just kind of like Bitcoin was that it's like, it just kind of sits in your wallet and it doesn't do anything, right? It doesn't earn dividends, there's no interest, there's no cash flows. And so said, hey, so that was kind of the narrative around one of the criticisms, I think, of kind of making a Bitcoin investment. At the same time, you know, I'm coming from a financial services background, and you know, in traditional markets, you have the ability to get a borrow on stocks for the purpose of hedging or shorting or taking the other side or what have you. And we really didn't have one in the spot market for Bitcoin at the time. There were derivative venues that let you kind of put on hedges, but there was nothing in the spot market. And so we started the lending business. We're about, I think, $15 billion or something like that of loans outstanding today. And I think about a third of that is Bitcoin. So call it $5 billion of sort of Bitcoin loans kind of outstanding. The people that are borrowing from Genesis can fall into a bunch of different buckets. One might be market makers. So they might be exchange market makers who need to obviously pre-fund exchanges to be able to make markets in. And so, you know, if you're required to pre-fund exchanges and you work within trying to arbitrage or make markets in 30 different exchanges, you're going to borrow some coins from Genesis and park it in 30 different exchanges so that you can do the buying and selling on the market making side. And number two, there are going to be guys who are using it as a loan, generally for working capital purposes. There's lots of businesses out there whose now working capital is not in dollars, but is in Bitcoin. And so they actually come to a place like Genesis to get a loan in Bitcoin, to get a working capital loan to grow their business. Much like you might go to a bank to ask for a commercial loan to go and build, you know, a new office or something like that. And so that is certainly kind of an exciting development as companies more and more, I think, kind of rely on Bitcoin as kind of their core unit of value for working capital purposes. Then there are guys that are going to be thinking, hey, you know, I want to arbitrage the futures market and the spot market. So market neutral guys that are looking to just purely make a return by arbitraging different markets, whether that's kind of in spot only or kind of using the futures and derivative exchanges to kind of do it. And then there's guys that are more speculators, right? They're going to borrow Bitcoin to go short, either because they think that the Bitcoin is still going to go to zero. There's not many of those people out there, but there's still probably a few. And then there's also guys that's like, you know what, I am a trader, I expect Bitcoin to have a, I don't even know, 30, 40% pullback in the next couple of months. So I'm going to put on a short position and kind of see how it would do. And if I'm wrong, I'll get squeezed out on the way back up. But that's just kind of the nature of trading.
Well, that's interesting. I think kind of brings me to a philosophical question about Bitcoin. And I can tell you my reason for getting into Bitcoin back in starting and downloading the Bitcoin client in 2011, but really getting serious in 2013 was I was quite frustrated after the financial collapse with the existing financial system and all of the errors that they were making with our money, and I saw Bitcoin as potentially an alternative system to the traditional financial system. And I feel that the trend is certainly moving towards both from within the crypto ecosystem, it's a financialization of Bitcoin, meaning we're adding additional crypto services, lending, borrowing, other types of yield generation, hypothecation. Are we actually just creating the traditional financial system with Bitcoin? Are we recreating the thing that already existed? And this is a question for everybody on the panel, what is fundamentally different now with what we're doing from the traditional financial system?
I think you've got an opportunity to use the best of both worlds. So, our background's foreign exchange. We have 35 banks who trade FX with us that can't trade crypto today. And over to what Michael was saying, they're not allowed to physically touch the Bitcoin. That's just what the regulation says. And for that exact reason, we announced recently that we're going to launch a cash-settled derivative so that the 35 banks can engage with us on the crypto side. But these guys need to wise up a little bit, the banks, because they're very much used to a 5-day-a-week market. And we've been in crypto for a number of years now, and that's not how it works. But then flip it the other side and think about what crypto can learn from the traditional methods. And some of the barriers to entry for institutions into crypto are things that just work in capital markets. So the capital inefficiencies of trading crypto for an institution, you have to fund every exchange fully collateralized. I know you can get loans and deals to allow for some credit, but there's no prime brokerage model. There's no central clearer in spot crypto. There's no household name that is allowing a large fund manager or an asset manager to come and trade how they would typically in other asset classes. And for that reason, they're holding back because they want a convenience. So they just want one credit intermediator who will allow them to access all the venues and manage their credit. That still doesn't exist. And that's what needs to be worked on for real full-scale institutional adoption. Look, 2021, there was growth and adoption for sure, but if we really want these asset managers, this real money to enter the space, there are a couple of items we need to address. Credit intermediation, banking, we probably need better, household names, tier 1 banks to bank the crypto firms, because is a large asset manager going to fund a crypto-friendly bank where potentially they have a larger balance sheet than the banks? That's just not going to work. So I think a combination of the two, and we might get there.
Well, do we really care? I mean, do we really care that these institutions need these services and that they do we want them to come into the space? I mean, I always thought that Bitcoin was a global settlement layer, right? So it is the system that allows you to settle peer-to-peer and trade peer-to-peer. Isn't the lack of a central clearinghouse the feature of Bitcoin? And do we really need to recreate this plumbing, or should the world sort of adapt to this new way of doing peer-to-peer?
I guess it's how big you want the market to grow, right? We're still very small. We're in a $2 trillion market. If the institutions start allocating, 5%, then we can potentially get to 5 times the valuation today, just based on the $200 trillion that we know as assets under custody today. do we want to stay at a $2 trillion market cap, or do we want to go from there? Do we want to grow? What as a result of that, what is the Bitcoin value? I think we could go to the moon if we get some institutions in and some real money.
Yeah, I'd say one of the ways to think about it is that increased, say, institutional adoption will necessarily drive more retail adoption. Being able to get Bitcoin into, say, investment products that are extremely widely available from the traditional asset managers in investment accounts. It may not be that they're necessarily, individual retail may not be holding directly Bitcoin, but they may be holding it in some sort of a basket where they're able to get that through their existing broker or something like this. And I would imagine, as people that are fans of Bitcoin, we would consider this a desirable outcome to have Bitcoin propagate as far and wide as it possibly can. And as much as the Bitcoin network itself in many ways is a settlement network, there still are questions of, say, credit intermediation and being able to safely deal with settlement networks globally. And as you mentioned, the eliminating of the problems in 2008 were around difficulties around settlements, difficulties around over leveraging, and Bitcoin kind of at its core is going to be help that with the fact that it has inherently transparent triple entry accounting and much more difficult to say rehypothecate because you know exactly where the Bitcoin is, you know exactly where it's held. And so a lot of these features, I think, to Jenna's point, we can take the best of both worlds and really kind of improve the state of institutional infrastructure by building some of these on blockchains. And certainly as we go out and talk, Anchorage has the opportunity to talk to all of the large Wall Street institutions and most of the banks in the country that are looking at adopting crypto. And many of them are looking at it and saying, hey, this is inherently safer in terms of settlement, but then also ends up looking like a very good form of collateral. So to Michael's point around looking at Bitcoin, not just as an investment asset, but as something that could be collateralized in the same way the banks could issue mortgages against a house, you could issue a loan against Bitcoin. And so I think a really large part of what's going to happen here is really capturing that notion of value and allowing, say, retail clients at banks across the country and institutions across the country to say, hey, we want to buy Bitcoin, we want to stay long Bitcoin, but we'd like to have a loan against that because there's inherent value there, and we'd like to be able to say, use working capital, go buy goods or services with the loans you've taken against Bitcoin. And so that use case around Bitcoin fundamentally as valuable collateral is really catching on within the institutional and the retail banking space. I think it's going to end up being one of the really big trends of, say, the next decade.
Yeah, Michael, going back to your philosophical question of, are we just recreating the same thing? Would we expect the same thing to happen again? It's a great question, but I know I'm preaching to the choir here at Bitcoin conference here, but you have to look at what underlied everything, right? And it was a fiat money system that could be debased, that could be manipulated. It all started with the first block, as we know, on the brink of bailouts, right? And so what's different this time is you're building it on such a sound base that can't be manipulated, that can't be debased, that can't have someone come in and just bail people out. And so there's nothing wrong per se about all these institutional services. The question is, what are they built on? Are they built on something where if you screw up, someone's going to bail you out, or are they going to be built on something where you better make sure you've got all your risk management and everything else in line because there are no bailouts? And so that's the thing that gets me excited is in that we need these services. Take just custody. People are not going to hold their own keys, especially for a big sovereign wealth fund or a big institution. You got to have those services. But the difference is, what is that built on? And so there's a lot of blame to go around with the 08, 09 stuff, but spoiler alert, I'm a big econ nerd, and the old adage is true. Show me the incentives, I'll show you the outcome. And we have a totally different set of incentives this time, which makes this so unique and exciting.
I definitely agree with you on all of those points.
So
go ahead.
My view, real quickly, obviously kind of the story of Bitcoin is still being written, right? And we have no idea how it all ends. But if you can argue that we've been on this journey for over a decade of kind of the Bitcoinization of the world, starting from absolutely nothing and to what it is today, to whatever the final product is. But when you think about the potential for what Bitcoin could be, right? If the absolute hyper Bitcoinization is no more fiat currencies, there's only Bitcoin, and every country has dropped their fiat currency, there's only Bitcoin for payments, use anything around the world. Step back from that at some point is going to be the reserve currency, right? Central banks adopting Bitcoin as a reserve currency. That's a precursor to this. All of this, the stuff that's happening, the Wall Streetization, the product, the services creation is the middle part of the story. You can argue whether it's good or bad, but in my view, you don't get to that end state, whatever that is, without going through the processes that we're going through right now of institutions creating products and services to help support it.
Yeah, I couldn't agree more. I think it's a necessary step in the evolution of hyper-Bitcoinization. And, how close are we to that, really? Let's put our forward-thinking hats on here. What does the world look like 5 years from now, 10 years from now? Is this a 30-year journey? Is this a 100-year journey? We've seen El Salvador obviously adopt Bitcoin as legal tender. They're sort of opening the door for other smaller nations who don't have their own, they don't have the power of the Federal Reserve to basically create money out of thin air in the same way. So we're going to see hopefully more of that. We have countries like Bitcoin who are getting shut out of the dollar, Russia who's getting shut out of the dollar system. Who is now considering Bitcoin as alternatives, and I don't want to get too political on that, but certainly many nations around the world are starting to look at how much dominance and control the dollar does have over the global financial system. Where are we? Is this going to happen in our lifetimes? Are we going to see a collapse of the dollar and a replacement with, say, Bitcoin?
I'm not going to predict the collapse of the dollar here. That seems pretty bold and whatnot. But coming into this, I used to think this was going to take centuries to potentially play itself out. And then things keep happening to shorten the time frame in my head, where Bitcoin has to do absolutely nothing but exist and run and work. And whether the geopolitical stuff, the macroeconomics, whatever it is, the things that's happening around the world seems to think, oh, wait a minute, my centuries, I've way overshot this. This is going to happen much, much faster than I could have predicted. And so my guess is a year from now, I will tell you that the time frame, which in my head is still in the decades category, might still be you know what, I was wrong. That's way too long a time frame. It's going to get even shorter because I think something will happen over the next 12 to 18 months that'll hasten my thinking on it.
And we're moving at light speed, right? So we've been in crypto for almost 5 years. And if we think where we were in 2018 and where we are today versus how things move in capital markets, I think your 5 to 10 year mark is probably with 2 times where we are today. I'd guesstimate 5 to 10 years, and we're in a very, very different space.
Well, I'd say the good news for all of us here in this convention hall and anyone who's interested in Bitcoin is there's clearly a life's work for all of us to do. I agree with Michael that everything here is going way faster than I ever would have predicted, which makes me very tentative to predict anything going into the future, except that Bitcoin is going to continue to expand, it's going to continue to grow, continue to get more institutional adoption, and truly we all have a life's work ahead of us to push this movement forward, continue to see Bitcoin grow and expand, and should be no surprise that all of us up here are probably extremely optimistic about the vision of the future that can come as we continue to see Bitcoin propagate into more parts of the financial ecosystem and stack that we all depend on.
Yeah, I couldn't agree more. I think when I started in and dropped everything I was doing to work in the space in 2013. I gave myself a 10-year window. I said, this is an important enough technology that I could dedicate at least 10 years to this pursuit. And I'm actually coming up pretty soon on that 10-year anniversary. And I'm looking at the space again, and I think that there's at least another decade of work to do. So I'm renewing my own vows. I don't know about you, and I hope everybody in the room is also doing the same. I mean, you know, I think it's just a very, very exciting time, and I just wanted to, you know, thank all of you guys for the work that you guys are doing to create great businesses in the space. What everybody is doing in this room. This is Industry Day. So I'm very, very excited for the future prospects of Bitcoin, and I think we should all work very hard to get this to hyper-Bitcoinization together. So I wanted to thank all of our panelists, and thank everybody in the audience for being here today. It's truly a remarkable journey that we've all been on together. So thank you very much.
Thank you.